What if I told you Bitcoin was born from a crisis? Imagine a world where the very foundation of money was being questioned, where trust, value, and technology collided to redefine our future. Hi everyone, and welcome back to our channel. Today, we're exploring an intriguing topic, the key distinctions between cryptocurrency and fiat money. For centuries, traditional currency like the US dollar has powered our daily lives. But with the rise of digital currencies, the way we think about money is changing. Let's dive into this fascinating evolution. Fiat money, tradition and trust. Let's start by looking at fiat money. Simply put, fiat money is the government-issued currency that we rely on every day. Like the US dollar, its value doesn't come from physical commodities like gold, but from the trust we have in our government and its institutions. For instance, the U.S. Federal Reserve continually works to maintain this trust, ensuring stability even through economic ups and downs. Consider how every cash transaction or credit card purchase is backed by a long history of economic policy and regulation. This system is deeply rooted in our history, providing a sense of security that has made fiat money a cornerstone of our society. Cryptocurrency, the digital disruptor. Now let's explore cryptocurrency, the revolutionary digital money of our time. Unlike fiat money, cryptocurrencies are not issued by any government or central bank. Instead, they are powered by computer algorithms and supported by decentralized networks called blockchains. Take Bitcoin, for example. Born in 2008 amid global financial uncertainty, Bitcoin was created as a response to traditional economic systems. It was designed to be transparent, secure, and independent of any single authority. This means that every transaction is verified by the network rather than a central institution, offering a fresh take on how we trust and exchange value. Key distinctions, breaking it down. Let's break down the differences into 3 key points using clear examples to illustrate the divide between fiat money and cryptocurrency. Number 1. Authority and control. Fiat money, controlled by central banks like the U.S. Federal Reserve. Fiat money's supply and policies are managed by government decisions. Cryptocurrency operates on a decentralized network. No single authority is in charge. Bitcoin, for example, has its transactions verified by a global network of computers, making it immune to unilateral policy changes. Example: when central banks adjust interest rates, it directly affects the value and purchasing power of fiat currency, whereas Bitcoin's value is governed by its fixed supply and market demand. Number 2. Physical versus digital form. Fiat money exists in both physical, cash, and digital forms, ensuring it's tangible in day-to-day transactions. Cryptocurrency exists solely in the digital realm. Transactions happen online, transcending physical boundaries and enabling global transfers without the need for a brick-and-mortar intermediary. Example: when you pay with cash or a credit card, you're using a system steeped in physical presence and established banking infrastructure. In contrast, sending Bitcoin to a friend across the world requires just a digital wallet and an internet connection. Number 3. Inflation and scarcity. Fiat money. Governments can print more money as needed, which can lead to inflation if the supply outpaces economic growth. Cryptocurrency. Many cryptocurrencies, such as Bitcoin, have a capped supply. Bitcoin, for instance, is limited to 21 million coins, a built-in scarcity that supporters argue protects against inflation. Example: historical instances of fiat inflation can be seen in designs where excessive money printing reduces purchasing power. Meanwhile, Bitcoin's fixed supply provides a contrasting model where scarcity could potentially enhance value over time. In conclusion, while fiat money has long provided us with a stable and familiar system backed by trust and tradition, cryptocurrency introduces a daring, innovative approach, one that challenges and complements the old system with decentralization, digital freedom, and scarcity-driven value. As our financial landscape continues to evolve, understanding these differences empowers us to participate smarter and more confidently in our modern economy. Which system do you think best serves our future? The trusted stability of fiat or the groundbreaking promise of digital currency? If you enjoyed this deep dive into the world of money, please click like and subscribe. And don't forget to hit the bell icon for more explorations into topics that matter.